Welcome to today's Thai session. And in today's session, I looked at the comments and I saw a lot of questions, a lot of common questions. And so what I'm going to do is answer for you the how do I look for the investments that I get and how you could potentially do the same. What you could look for to make sure you're not getting into a bubble. If it's overbought, if it's oversold, if it's the right time to get in. Just like the Three Bears story. The porridge that's too hot, too cold, or just right. I'm going to show you all the indicators to use to figure out the investment choice of your pick and if it's the right time to do so. I'm going to also show you just 2 resources that are absolutely entirely free and you don't even need an account to do these things on. So if that excites you, go ahead and drop that like already and let's get diving into the resources I've got for you because I'm excited to teach what we've got today. First resource that we have is an amazing website that I call, well, it's not that I call it, but it is called Stock Analysis. Stock Analysis. I don't know if I'm going to edit this. It might be cool if I do. We'll figure it out. It's fine with me. All right, so in Stock Analysis, what we've got is a super dope resource. What you can use with this resource is you can look at what's happening in the marketplace. You can look at top gainers, top losers. And what that means is if in today, what went up and what went down the most. So it's really cool. And it also gives you a lot of insightful information so you can make your decisions. So let's dive into this resource real quick. So first, it tells you some trending stocks right on top. You know, you can see basically on trending things what people are basically buying because it's, again, trending. It's kind of like TikTok and Instagram and all these algorithms. What's trending is where the attention is, money flows, where the money flows. You see what I'm saying? Go get the money. So anyway, top gainers, you can see what went up today. JTAI. If I was in that Jet AI, I'd be up 133% today. 95% for this SRM. I don't necessarily know what these things are. I'm just reading you exactly what the top gainers are word for today. It may be different if you go in here whenever you check this resource out, but I will show you again how I use this resource more for my own purposes. I'm just explaining first these major resources that you can use when you're getting started and might not know what to get. And then you also have your top losers. So you can see what's down for the day. You can see this is down like 69%, 57%, 48%, all these things. And a lot of people, they say if there's blood in the streets, that means it's time to eat, which basically, again, breaking that analogy down for newer people, newer investors, is when it's red, that means, or it could mean a couple things. You want to research it and figure it out. But if it's red, is it oversold? Is the company going bankrupt, or did they just do something and now people don't like what happened, so they sold the shares and now they're still operational, and so you could potentially get a discount, right? Or are they going out of business? One of which is a good choice to get in, the other is not. And so beware of that. Again, I don't know what those investments are right there. But anyways, below them, you have a lot of market news that you can read. You can read, research, and figure things out. What's going on right now in the marketplace? People will talk about, report here today. You got Market Watch talking, you got Forbes, Kiplinger, ETF trends, and all these different things, all these different sites and resources. You can filter it by different resources and all that stuff too, so you can stay in touch with what's happening. Now, if you already kind of know what you want to invest in, you kind of know what you want. Let's just take, for example, Nvidia here at the top. When you have picked your stock, and let's just say it wasn't sitting right here. Maybe you got to go here. It puts a whole bunch of stocks right there for you immediately. It says what's trending again. But again, we're going to type in NVDA. Let's go. Nvidia Corporation. It shows you a whole bunch of other things too, alternative options that you could also do research on. Just because this Like here, I'm gonna teach you something crazy. All right. So, and this concept right here is gonna make a lot of people a lot of money. But here we have Nvidia stock. Nvidia itself, you already know what they do. Computer parts, tech, it's all AI. Cool. A lot of great things that are probably gonna make their stock go up. Now, we're going to open their stock here in a moment, do some research, and talk about them specifically. But on this list here, there's this one right here, which is called DIPS. Now, DIPS is an option income strategy ETF. And I teach my internal team, my Discord group, exactly what this means. And so you're going to get a little bit of a taste of that right now. You get to basically make money when the thing goes down. When Nvidia is crashing, you can make money by buying dips. And I'm not saying buy the dip, I'm saying buy dips. And I'm not saying this as an investment advice either. I'm saying, but this is what I would do. See what I'm saying? So it's crazy because this right here literally goes up when this goes down. It's an inverse correlated ETF. And you will make money when one goes down and the other goes up. But just knowing that concept means that when Nvidia is recovering, dips is going to go down. So again, got to be active, got to be in the market, got to be in the know, got to be just watching this stuff. But that's just a cool little thing for you to know. So you can make money when the market goes down. Then once we open this up, it has right away the financials. It starts you off in the 1 day. You can watch the 5 day, 1 month, 1 year, 1 day, all that stuff. It's real great. You can check their financials, their statistics, forecast metrics, dividends. Now this is a fun little tab right here that I like, but I'll teach you that in just a second. It gives you all the little breakdowns right here as well. Talks about their dividends, talks about their earning dates and all this types of stuff. Oof. Look at this. Not saying bad things, but you got to also understand a lot of these metrics. Market cap, again, how many shares they have out, basically the whole market cap. Again, there's trillions of shares available. So just think about this concept. There's trillions available versus something that might have just millions available. This would have to go up pretty significant for your share to go up. That's all I'm saying. We'll get more into the specifics of this in the future. This is, again, just a very basic explanation video, but yeah, it's really cool. A lot of great things, a lot of great resources. There's news specifically on the stock right down here. So if you want to know what's up, 5 hours ago, they're talking about better AI. 12 hours ago, top 5 growth stocks to watch. 14 hours, 2 top bargain stocks ready for the bull run. So, a lot of good resources for making your decision. Now, what do I look for, right? Like I talk about in the private group, is there's many different things that I look for. Specifically, I like to buy money. I learned this from Chris Johnson, buy money. So I get income and then I buy money. So essentially it's like, yo, you go get your work on. You could, even an employee at McDonald's could do this. You go work, get a paycheck. Now you have money. I'm going to use my money twice and I'm going to buy some income. So I'm literally going to take my money and buy some stocks that are going to pay me. And that's why I said these dividends. So I go over here. I know what the stock's doing for the most part because, hey, Nvidia, huge corporation. They have a whole bunch of different segments of their business. AI, super tech, computer tech, all this stuff. I've said it tech twice. But because of that, I know they're not necessarily going to go away just like that. You do have to watch legislation, trade, infrastructure, and a whole bunch of other things when you're investing in something like this because there's a lot of competition in this space. But for the most part, you can look and see that their dividend, they went up. Ooh, okay. They went up. They're now paying like 10 cents a month. They were paying less than a penny, consistently less than a penny. And now they're giving away, oh wait, that's not 10 cents. That's less than a penny. So, actually that is 1 cent. They're paying 1 cent, yo. Look at this. I'm gonna zoom in. Show you all that. Sitting too far away from the screen, tell you. But anyway, I got these windows so small. But 1 cent for this one. This one is not one that I would buy for their dividend. I can get way better returns for my money. One that I would, again, I'm gonna tell y'all some investments on this video because it's free. Some things that I used to do, but I don't necessarily buy these things anymore because I found better things. So I'm gonna show you one right now that back in the day I would swear by, and I tell you it's still a really good one. It's just I found better ones. So here's one of my super secret dope. In the past, I used to swear by this one. Stocks. I'm gonna give you ORC. ORC, I'll tell you some things about ORC. They are real estate. So you pay your rent? Thought so. So if you pay your rent, chances are your landlord received some money for that. And if they own your house, then they got paid. Now, there are some corporations and companies that buy up tons of businesses, plots of land, stores, houses, apartment complexes, you name it. And because they own that, then they rent out, lease out, give space to tenants. Those tenants have rent. That rent then goes to paying stockholders of the ETF a dividend. Now, ETFs must pay out about 90% of their stock share of their earnings. Can't even speak today. ETFs, the REITs, the REITs must pay out 90% of their earnings through their dividends to their stockholders. And therefore, watch this. This is, again, $8.77. You saw Nvidia, it was paying 1 cent per share, and it was $139. And it was paying a cent per share once a quarter. So once every 4 months, you will receive 1 penny per share you own. So thank you for $139. Here's a penny. ORC, $8.77. Go into the dividends tab. Monthly reoccurring income. Because people pay their rent monthly. 12 cents per share. So now you can now do some math here. If you have to have $139 to make a penny, or you have to have $8.77 to make a penny, how much money could a woodchuck chuck if a woodchuck could chuck wood? Let's see, we got 139 divided by, let's just say $9. Let's just throw this in the calculator. We got 15.5 or 15.4444 shares. So now this is literally just taking the logic of the share price of the other one, 139, divided by a raised $9 price of this one will give you 15.44 shares. And this will pay you approximately 12 cents per share. So now we take this number and we multiply this by 0. I'm going to go back over here. Times 0. Well, come on, what the heck is it not working? Times 0.12. So you're getting $1.85 for the same amount of money versus a penny. So then it's like you can buy enough income to replace yourself paying bills. You see what I'm saying here? This is super dope because, again, I've talked about this concept before. You can buy enough income where your iPhone's free forever. You can buy enough income so your Netflix subscription is free forever. And you can also be supporting things that are in the marketplace that's going to go up in value. So you can be investing while also be living your life and enjoying things. You could be having a budget that pays off your credit cards or your subscriptions or other things based on the fact that you're investing. So it's like, mindset shift, right? But like, let's go. So this is one of the ones that I used to swear by heavy. I used to literally be like, oh man, how many shares of ORC do I need to then make $1,000 a month or pay all my bills every month, right? So this is like literally the key to getting started and understanding this very basic math. Then you can literally, again, I will give you some warnings here for free. This is free game. Do not, do not make some mistakes here and go and do what they call like div chasing. Now, there are some really great dividend paying strategies out there. There are income ETFs. Talk about it all the time. There are other like retirement funds, literally for older retirees to have income. So income ETFs, again, but just for retirement funds. So you can literally research these things now being younger and then get in now when the prices are lower and then still be using all of the benefit while you're young. Retirement is not an age, it is a financial formula. And I talk about this all the time. But this is literally that financial formula. How many shares of XYZ do I need to create my batch bills B? Y equals MX plus B. All right. So your financial goal equals the amount of shares that you need times the amount of the dividend that it pays plus B. B is a batch of things. It is your bills accumulated minus your normal income. And if you want to retire, subtract your normal income out of there, just batch your bills, and there you have it. Y equals MX plus B. So this is my gift to you, the retiree formula. How you can retire. Financial right there. But yeah, this is what I use. You can go all the way back here and see that their dividend it was 9 cents at a time, went down to 7 cents a little bit, 7 cents a little for a long time. Went down to 5 cents. But hey, you still made quite a bit of money from your initial investment. Imagine if you invested one time and just collected for a long time. So then they start going 45 cents a little bit, 40 cents, looks 2018, 40 cents, 40, 40, 40s, 27, 30 back in 2020, COVID, but they still stayed strong doing a dividend at 32%, 32 cents, 22 cents, 16 cents, and now we're down at 12 cents. But it's also only 8.77. And if you do the overview and you go look at 5 years ago, the price was a lot higher as well. So the price has gone up. You've been, let's say if you're, again, creating it for reoccurring income purposes, it will pay a dividend. So your distribution every time they pay a dividend is going to go down. And then if you use that to then repurchase more shares, again, this is not investment advice. This is getting so close to the complexities of this stuff because there's a finite line of stuff that you're like, well, if it's going down like this, how is it a good idea? When you start buying income at a discount and then the reoccurring income you get, there's a dollar amount for the income that you want to buy. So right now, let's say, for example, $1,000 a month will cost you approximately, and again, you got to also keep up with market rates. So you're going to get this thing, and now you got to go use this thing to go make some more money. You can use the value here, but again, over time, that's why these specifically I've found there are better dividend ones over time. But I'm not trying to scare y'all out of doing this. I'm just trying to say there are complexities to these things, and that's why you can get in the income retiree ETFs and stuff, which are slightly better for you over time. But let's say we got the dividends tab, 12 cents. So let's say we want to make the goal of $1,000 a month divided by 0.12 cents that it pays out, 8,333 shares. So that means the price at, let's just round up and say $9 right now, is $75,000. So the cost to make $1,000 a month is $75,000, which is approximately, maybe let's say, I don't know how many dollars a year, let's say a employee at McDonald's may make if they work full time there. But if the standard person makes approximately, rounding up just numbers, 40,000 a year, and could potentially, this person, upon starting their working life, stays at home, earns most of their dollars, all their dollars essentially, they earn them, but not spend them frivolously, just spending the little things that they may need for transportation and, clothes and things like that. Save as many as possible by investing it in this, right? Because you're also then going to get a dividend back to you. So over time, your expenses go down by the dividends that you're getting. So now, a person working at McDonald's who then is still maybe even in high school, able to save because they don't have heavy rent from their parents, is able to then in 2 years potentially make $1,000 a month reoccurring as their base. That $1,000 a month that they then have in dividends once they start to go out into the world can start to help offset their rent and all these other things. So like that's what I'm saying is like there's a finite dollar amount to then get you started with a thing. I look at all these things as financial engines. So what your financial goal is, you're going to look at the bottom line investment as the engine for that. That's why I got and said like it gets complex. Like ORC, it's a great stock. It's great in general, but is it an engine that's going to do the thing that you need it to do for a long time? And I just haven't researched it anymore since I found different investments to get into, but it's pretty strong from the October of the 2023 till even now this month, the dividend has been the same. So that's been, 2023 to 2025, and it's been the same. So it's pretty solid. And so in that time frame too, if it only cost how many months is this? Let's just say 3 years. So 12, 24, 36. You got 36 months. That would be $36,000 that you made back for the initial cost of $75,000. And so you're already about halfway back to your initial investment made back to you in dividends. So if they did alter the dividends, it just affects the timeline, the T in which your initial return is paid back to you. So then again, once the initial investment had been paid back to you in the gain of the dividends that you received, then your investment was free. So there's a way in which I look at all these things. So that's how I look at it. That's just how I look at it. So if you want to buy income enough, there's a cost for buying income, and then once you received a return on your investment beyond the initial cost you put in, your investment is free, and now it's just an engine that's printing money for you. You have a money printing machine. So, yeah. Then if you want to really get into it, the second resource that I have for you is this one right here, stock charts. And this one's so amazing because this is where I do all my actual analysis and stuff like that on it. And this video is getting a little bit long, but hey, you're getting a whole bunch of value again, I'm just chatting it up, just unscripted, just telling you all the things that I think about when it comes to the stocks. But ORC, let's throw her in here. So ORC, I go down here. I learned these tricks from a lot of different people over the years. I got to give kudos to like Chris Johnson, my friend Mason Speed as well, and a whole bunch of other individuals over the years that I've just like picked up things over. So I come down here though, and we got the price, volume, MACD, and I don't really price performance. I don't really care about this one so much per se. What I do is the RSI, Relative Strength Index. All right, so we got that. Update that chart. And then simple moving average, exponential, simple, leave it at 50. Awesome. So dang. So what I'm seeing already on this chart, and so I'll explain each section that I created first. So we got the RSI up here at the top, the Relative Strength Index. This is the indicator that you will use to figure out if the underlying investment that you are purchasing is overbought or oversold. Oversold means that the market, everyone else out there, maybe there was a news article or something, or another pandemic event happened. So then everyone got scared and they sold their shares. So now the market is oversold. What you would see if it's oversold are these indicators right here. So I'm going to zoom in. This being at the top, coming all the way down. This line right here is normal. So we went all the way down right here and hit this line right here. I'll show you what this line indicator means. This indicator is the 30 line. Anything 30 or below is oversold. Anything 70 or above is overbought. And as you can see right now, ORC is at 78. Means it's overbought. But the thing is, this is only an indicator based on market price and current trends. You got to also then do research external of that. Around this time frame, we've had a lot of changes happen with politics. We've had a lot of legislation changes. Real estate is starting to boom. A lot of things are starting to change and go up, right? So right here is a reflection of a lot of that. So even if it's overbought, in some cases, it could still be early and a good time to get in, because you might not see prices this low for a while, depending on the news of what's happening, depending on what is actually causing the event to be overbought. So again, it's just something to look out for, but you can clearly see it here. I go down here to the second section that we have here, right here, boom. And they have at the bottom some candles, some little sticks, and we also have some candles here, right? So what this is showing is the price. What this is showing is the volume. Volume is the trade action, how many people are buying or selling, right? Is it more of a sell volume or is it more of a buy volume throughout that day? And as you can see right here, following a, not really, I'll say like following, it's just right away the same day, massive buy candle, whoosh, spiked it up, bam. Massive sell event because a lot of people made some profit, bam, brought it right down. Then we had a massive buy-in, 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 sell, sell, buy-in, 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 buy-in. Like all of it right there in front of our eyes. Like, so this is right here, volume boosted. I would do a little bit of research on again, everything I just said. The why is it booming? Is it legislation? What happened? Is ORC? Did they get a new deal? Whatever's going on, right? But that's what I see right away. And then so down here we also have the MACD, the moving for whatever that is called, but like I'll just explain how it works. Basically you get to see the trend of, is it moving in the direction of selling or buying, right? So like as you can see, these are more on the, if there's a flat line and it's more up above that flat line, it's buying action. If it's below it, it's selling action. As you can see, these are more buying action indicators, increasing, often increasing even more. So now you know it's like a lot of buying volume, as we also saw back over here, a lot of buying volume right now. So maybe hype, or maybe the time to get in real quick before it changes. Like, so I'm not gonna, again, not investment advice. I'm also, again, not buying some right now. I'm just telling you what I see. And then it's really that's really about it. That's how I use that indicator. I don't really use it for too much else, but primarily what I use is the RSI, and I look at the price and I look at the volume. And I go then from the volume, looking at the price, previous highs, previous lows, the time period of which this is 877 and this right here is all the way down at like $7, and it hasn't been this high in a while. It's literally hit about $7 and hit resistance every time. Resistance, 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 resistance. But then it's come back down from these resistance points and hit support, 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 like all across the board. Like, we're in whole new territory right now. That's all I see. And so because we're in whole new territory, it's like this one is one of those things where it's like flip a coin, do what you feel comfortable losing, but also I would be buying it because it is income if I didn't have better options to buy income right now. That's all. Um, so yeah, that is the two resources, the indicators that I use to figure out if it's overbought, oversold, what the market's doing, why it's doing what it's doing. You can go then scroll down to the bottom of the not stock charts, but the stock analysis website, and then read the news on the stock after you look at the stock charts and see what's actually happening intraday, intra-month even, volume wise, and then go read the news and figure out why, and then see if it's a good reason or a good time for you to get in or why you would want to. Um, Again, it's all about your strategy and what you're looking out for an overall outcome. Again, seeing the ORC's price, I zoomed out, saw the 5-year price point. If you started buying the thing at some point and you had in your mind it was $75,000 or whatever for $1,000 a month, it was actually a lot less back then because it would have cost you more per share, but it paid more per share. So maybe it could have potentially also still been 75,000. You just got to do the math and figure it all out. But depending on your overall outcome, what you're looking for your goal with your investments, there's a different vehicle to get you there. There are different types of ETFs. ETFs are funds, basically active or passively managed funds. Passives being we just picked a whole sector and said based on the sector's performance and the stocks, we're just going to pick the top 10, top 50, like the S&P 500 or whatever. Or there's actively managed funds, and they will literally be a mixture of different companies that the people, a group of people would decide. And basically you're paying a few different maintenance fees for that, but you would still get an overall return and not have to think about, oh, I want to invest in medical companies, but I don't know any medical stocks. So let me go and research all the different medical stocks. You could just invest in a medical ETF and then get the result of another company doing the research for you. So it's like very simple. And so based on, again, the goal that you are looking for, they have, if you're retiring, a lot of retirees, they want reoccurring income. If you're young, you might have not even looked up the fact that you can buy reoccurring income. And so it's like time locked because no one gave you access to that information. But if you have the information that I could just be young and buy these things, you could start to buy reoccurring income. Retirement's not an age, it's a financial formula. I will keep repeating that because there's different vehicles to get you this result. The result of retirement is you've refinanced your life through where your income's coming from. It's not coming from your labor, it's coming from something else. Business owners have refinanced where their funds are coming from. It's no longer coming from them trading their hours for dollars, but it's coming from them building systems for dollars. And they put the right people into those systems, and those systems are now serving customers, and those customers are paying through the system, creating income. An investor, same thing. He's either earned his dollars by working or earned his dollars through the business route or self-employed route, and then put those dollars to work to then basically giving his money out as loans to these other companies and having that money work for him. And hopefully that money comes back with friends. And so that is how the investor gets more money back. And so the self-employed person relies on his ability to either have others in his network that can sell his services for him, or he sells his services for himself through his network, but he became self-employed. Therefore, he must serve the customers and also acquire them. And potentially, if he is wise and smart, he builds systems along the way that he has done successfully and train understudies to replace himself and become eventually the business owner. And so there is a natural progression to all these things. And if you want to learn more about any of these things, this is just a little bit of what I talk about and what I teach in our private group and community, and also within the Talent to Income Academy, the Talent to Wealth Academy, and in the new BYOB and BYOCB. to be your own bank and the be your own crypto bank. These are two great, amazing concepts in which I've recently dived all in, figured out, and now I am on the investor side of a lot of different things. Truly refinance my lifestyle through income that comes through my investments, and then it builds my ability to build businesses because I can either do the work up front and build the systems to then put people in, and then I can put people in based on the reoccurring income that I've created. So now the business is self-sustainable. And so I can teach you how to do all these things. Just let me know what you'd like to know. I also did promise an additional super dope bonus for you. And so what I want to give you is potentially, if you don't have a stock brokerage account already, this will give you, and I, of course, if you want to support me, I appreciate that, a free stock. So the links down below will be a referral code to the brokers Robinhood, Webull, and M1 Finance. I'll put those down there because those are accounts that I use right now. And as I use more, there will be more links in there as well because I want to keep you all with the best of the best resources. So if you want a free stock, go ahead and check one of those, tap it. We'll both get a free stock. And yeah, it's a way to support me without buying anything, right? But also a way to get a free stock and start your investing journey right now. So make yourself a paycheck and make your goals, dreams, and ambition a priority. And I'll see you in the next one. If you like this video, go ahead and again, if you didn't already, tap that like button. It really helps the algorithm. Go ahead and drop some comments on the things that you've learned. I appreciate that a ton. And share it with a friend if you found any of this insightful. Thanks again, as always. And I'm going to steal a little bit of something that we did from our Fill Your Cup podcast back in the day. Ashe.